I'm Rodney Drake, Chief Strategy Officer at Valid Systems. Worked in banking going back 20 years, most recently at KeyBank, and have been at Valid for 10 years, where for the last 2 decades, we've been working with companies, with banks primarily, to manage fraud and check deposit risk. Things in my mind that are kind of prominent, I guess. One is there's, I think, a little bit of a misnomer about check fraud gets brought up, but there's a broader problem that exists with check. There's check friction, and you have converging things that are occurring simultaneously. And so our message has been around this convergence, which is while volume overall is decreasing, and the digital migration that came out of COVID is forcing and encouraging customers to deposit checks, mobile, ATM, not to a teller, right? That's what the move has been. It also has increased so substantially in fraud. And in those channels where a teller is not, is where the bank is least sophisticated and least able to manage the fraud. They provide friction to the customer because they don't even have to follow Reg CC in a mobile deposit. So they don't have the tools necessarily that in mobile that they may feel like they have a teller. The volume they want to go there, but then they limit the dollar thresholds that a customer can actually deposit. They don't necessarily have to provide as good a funds availability. So the customer's not incentivized to use mobile, and yet the fraud is going there. And so the bank has this proposition of, let me decrease the cost to serve, right? Let me try to offer you this off-ramp through this digital method on this very expensive pain in the butt to process transaction. And yet nothing in the system is actually making that an easier transaction for the customer or incentivizing them to do so.
There's a ton of stuff you just said that I want to drill into. But I even have a bigger question, right? So why are people still using check? Why?
Right? Liquidity. It's liquidity. So think of a small business, right? Sole prop, may have a dozen employees, or even a larger business, but maybe they don't pay for the ACH or wire rails that their global treasury management solution at their bank offers. They've never stood that up, but they do have a checkbook, and they'll write a check for a large payment. They'll write a check for payroll or petty cash because it's easier for them. It's kind of what they've known, and it allows them to float dollars. So if they don't push a button and the money is immediately extracted. Some payment rails, the money's going to be gone from their account immediately, but it hasn't actually shown up in the payee's account yet, right? There's still a lag. The second you do that, you disincentivize that method for the person who cares about cash flow. And so small businesses and even larger businesses that might not ride, the ACH or wire rails, or especially the newer, immediate FedNow, they are leveraging check for liquidity, primarily, and simplicity, because that's the way they've always run their business.
That makes total sense, and I'm glad I asked that question because I didn't appreciate that. Like, obviously forgot about the liquidity part, right? I remember my parents would still write check. I remember now. Also was the only thing they could do at that time. One of the things you just mentioned earlier was check friction and check convergence. Like, I can't remember last time I used check, right? So help me understand. Obviously, you're surrounded by this stuff, and you see the data, you see everything that's going on in terms of the check volume, you see in terms of the check fraud, you see the patterns. But let's start easy ones. What is check friction?
Yeah. So number one, a check isn't obviously an instant payment. We actually work with banks to make it that, but traditionally there's a processing that occurs that is all in kind of day two. It's all next day. Reg CC is going to require, right, some degree of availability after next day, day two, and thereafter. Banks have some discretion, and by and large, most banks are giving access to funds if you deposit a check the next business day after you deposit that. But there's a problem with that. Next business day means after cutoff, which on a Friday, after 9, 10, 11 o'clock, you might not get those funds until the next business day, which then is Tuesday, because the next business day is Monday, it's after processing. You can go 3 or 4 days without access to a check that you deposited. So that's one component of friction where not only is this an elongated time before the customer can access the funds that they were depositing, it might be ambiguous to them as to when those funds are available. A lot of times banks aren't able to provide that clearly, definitely not at the point of presentment. You have to read disclosures usually to understand that. And then there's the bank side of the friction, right? So it's a very costly transaction to process. A lot of times because of the fraud, because it's low-hanging fruit for the fraudsters to attack, they have to deploy even more resources to fight the fraud, even though it's a declining transaction. So there's all these points of friction within the system today, and it's primarily due to fraud.
Fraudsters are taking advantage of the friction. Like, I'd just love to know some of the examples of fraud that you're seeing in like, just dumb it real down for me, 3-year-old.
So one of the big things to call out is after COVID, there was so much fraud in government payments and stimulus payments globally, right?
Yep.
And that weaponized fraudsters and funded sophisticated fraudsters in a way, right, like we may have never seen before. So coming out of that, when that tap ran dry, check was one of the payment methods that were immediately identified as, hey, let's go hit this open opportunity. And that's what's occurred. So there's a couple of different things that occur here. One fraud tactic is think about as a bank, good customers gone bad. And it's them being duped. It's them being defrauded oftentimes, or it's them looking for fast money. And here's the scenario. The scenario is I'm someone with a large bank, a national bank checking account. I might have been a customer for 2 years. I'm a low balance customer, lower income perhaps, and I see on social media this call to action that's from fraudsters. Or you could think about what was in the news with the whole Chase ATM glitch. There are millions of posts that are specific to banks and account types. And if you have a such and such bank account and have been there for X number of months, DM me for your $500, check glitch. And what is occurring oftentimes is check fraud. So a fraudster will sometimes send a bad check to this person, or they'll even download it or the image of it. They'll deposit that. They'll Zelle money out of their account to the fraudster where they're splitting those funds, and then the check comes back and bounces, right? And the account is compromised and ends up overdrafting and charging off against the bank. So there's these fraudsters.
Why did I just Zelle? Sorry to interrupt. Why did I just Zelle the money to the fraudster?
So I'm as a fraudster, I say, hey, I found this hack.
Yeah.
So I'm going to write you a $5,000 check and we're going to split it. So you're going to make 2,500. I'm going to make 2,500.
Why don't you send me 25 and the 5 goes to you?
Pull all your money out now, right? Zero balance. Deposit this check, right? I Zelle you 2,500. I take out the 2,500. $5,000 check bounces, and we both make out with $2,500, right? Now, a new account might not have a limit, a threshold where they can deposit a larger dollar check, but an aged account from a customer with a long-standing relationship is given more latitude. And in that specific transaction, the bank isn't identifying the good customer gone bad. And we see that. We see that a ton. And so they have, maybe it's 10 grand, right? Or even larger dollar amount, which we've seen occur. The other one is where it's, mostly older population, seniors, that are being duped in a very similar scenario. They are partaking in that fraud unknowingly. And now the problem is that the banks, uh, the fraudster in that isn't the customer, they're the victim, but they were the ones that perpetrated it unknowingly. And so there's so much friction in that because they're trying, the customer is mad, sometimes mad at the bank, right? Why is the money gone? The money has been used by the fraudster. They don't have it. The customer doesn't. Yet the customer was the one that deposited the bad check. And now the bank is trying to make heads or tails of, do I keep this relationship? We're out these funds. It's a very complicated and messy situation.
Yeah, sounds like it. And I don't know if you've heard this term. Certainly use it over here at NayaOne, called silver fishing. So basically, you are going after the older age population for fraud, and of course they'll be more favored towards checks, so it also makes sense. And we've all got somebody in family that's been affected by it, and we're like, okay, constantly, like, just drop your phone, don't touch it,
right?
No CTS for you, grandma. So if you're a bank and this is happening to your client base, and a lot of banks will have older population as customers, right? Because that is also an issue in the banking industry. Like, based on what you know and what you see from your customers, like, how does a bank think about this scenario?
Yeah. Well, the low-hanging fruit response, the immediate response by a lot, are these calls to action that are just insufficient. It's trying to make customers aware and vigilant. It's trying to teach them of these
So education
scams
and awareness.
Yeah, education and awareness campaigns that are on the letterhead of statements or within an online banking banner,
Interesting.
right?
Yeah.
Mobile banking pop-ups. You see it if you're banking at a larger institution. You'll see it every time on mobile banking. And I mean, this is one way, right? But it's obviously very limited. We would say there's a need for a smart, and we use a supervised machine learning modeling process in order to identify at the transaction level where you find these out of pattern instances, because sometimes you need to help, stop the client from harming themselves. And these education campaigns only go so far, but being able to monitor across a portfolio at the transaction level, where you can find these out of pattern, deposits and instances where fraud is being perpetrated. That's where, the secret sauce is. That's where I think you make real headway.
I might not be asking the right question here, but if I was a 20-year-old and I'm living on my mobile phone, why do I care about check fraud?
Yeah. Unless you're the one perpetrating it, you might not very much. But here's a couple of scenarios where it occurs, right? So one is your experience is going to be predicated. Your experience with the bank is going to be predicated upon a couple things that the bank is determining. Number one, their own risk tolerance, right? The processes they put in place, the points of strategic friction in whatever the relationship with you is. So every time you want to transfer funds, every time you want to make a deposit, anytime you want to draw funds out, right? It's going to be predicated upon the risk threshold, the tolerance, the technology, and the customer experience they're trying to design. And the fraud that bank, that institution is constantly fighting is always in opposition with the customer experience you receive. That is inherent to nearly every process. So that if you think in a deposit process, right, the friction is there in order to try to counteract the fraud attempts. So I'm going to delay funds. I'm going to limit what you can deposit, right? I'm not going to make this immediately available. I may be ambiguous about when you receive your funds because I don't want you to know. So I don't want you to think this is a tactic that you can use in order to get fast money, right? So if there isn't a lot of intelligence behind that process, whatever that process would be, if it's a deposit, if it's a transfer, absent of an intelligent process behind it, then you're left with a dumb process that the customer also is being put through. And that's where the friction has just amplified, because as faster payments are becoming ubiquitous across the
Mm-hmm.
financial ecosystem, we have these areas of entrenchment that are left behind. And check is one of those because of the lack of, we would say, um, new thinking enhancements like supervised machine learning modeling and AI being applied in session at the point of presentment across a large data set, right? Like it takes sophistication to try to change the value chain of an old transaction like the check. So for Valid, we're a 21-year-old company. We started in check cashing. So think walking into a Walmart, a convenience store with a paycheck, payroll check, and slapping an ID on the counter and walking away with cash, right? So that's kind of our beginning. And that's we would say actually really critical, because from our beginnings, that frames the way we think about check and check risk. And then it's broadened since then, and I'll get to that. So within check caching, we kind of started then 15 years ago, partnering. At the time it was with Key Bank, the first kind of super regional bank in the States, to be able to offer check cashing, true check cashing, to not a customer coming in and cashing a check. And so that was our first kind of bank foray. And then we started diving more into banks. And what that became was check deposit, which is different. And
Mm-hmm.
then that gets to some of the secret sauce. And some of the secret sauce is using a check cashing type decision process, which is immediate. Like you cannot wait. The customer is there with check and they need to convert that to cash, and then they're out the door, and that has to happen fast. So you can't go through a time intensive process. It needs to be immediate. So that's one of the kind of staples that we were operating under that's kind of created the decisioning process we have today. The other one is, as we dove into bank, we leverage the amount, the intense amount of data that a bank has on their customer. And this goes back to what we were talking about with pattern recognition,
Mm-hmm.
which is, what does that depositor normally do? How do they normally behave? Let's create this fraud pattern recognition that allows us to understand what's common for a new account holder, what's common for an aged account that's been longstanding with high balances.
That's
Those are
super
all
valuable.
different profiles, and that's critical. And then the other piece then is, the way in which we were building at the time. You go back 2 decades, stats, and in the last 10 years they've become features
Mm-hmm.
about the check itself.
Mm-hmm.
And so we deployed a supervised machine learning model looking at, and this is the other piece that I would say is really critical, consortium data, which is a way most have thought about it in the industry, is I get a check in from my depositor, right? Is this check good or not? And that's the lone question that is asked. Is the
Mm-hmm.
check good? And that's
Mm-hmm.
the wrong question, especially today. And here's why. So if I'm looking at a consortium, then I'm saying, is this account, it might be AWS or someone else that's telling me the account's good and in good standing. Well, that's great. That's exactly where the fraudster wants to write a fraudulent check off of, is a good standing account with a high balance. But that payer wasn't the one that issued that check. Or, this check, though it was issued by that payer, has been washed and was never intended to be deposited by me, right? And so
Mm-hmm.
consortium data tells you a signal, but it's not necessarily the strongest signal, and definitely not in every fraud case. The image of the check, right? Like, it can be a good check, but it was never intended to be deposited by me. Or it's
Mm-hmm.
exactly what that payer looks like, but it was a stolen check, right? And so there's nothing about that check, the way it looks, the account that it was drawn off of, that's going to tell me, the bank, that's showing up, with my depositor showing up, saying that this is fraud. And what we do is we look at, what do we know about this payer? What do we know about this depositor? And then, very importantly, the relationship between the two. And this is machine learning is done right in mass and in all different types of instances. What we don't see, because we talk to Snowflake, we work with cloud providers, we work with other machine learning outfits and AI building tools. We are generally among the first or only businesses when we're engaging with these very large companies that are using their tools the way that we're using them across the large data sets. We use them all in real time. It's often being trained some time in batch by banks or at the end of a day cycle. What we are doing is leveraging large data sets immediately in session before a deposit is committed. So from the time that the customer takes a picture of their check, they click the submit button, and there's a wheel or there's some type of thing to denote, within that half second, we're operating behind the scenes this huge process. So that's what's become our secret sauce, is being able to pull together disparate data sets, all right, understand relationships between these data sets, and identify patterns in real time.
Learn something there, right? Which is the value you're bringing to the table, which, don't take me the wrong way. There's a lot of fraud companies. Well, there's a lot of companies out there that are helping banks solve for fraud.
Absolutely.
Right. And we work with banks, and even banks are like, I don't know which one does what. Like, can you help me, like, kind of, can you help me file them? What helps me with what? Right. And the thing is, as these companies grow, they kind of go, oh, we can do everything. We can do everything. It's like, okay, great. The confusion just amplified. But to the bank, to what community or region or USP they're serving and their customer base, some of these things, like how you pick a solution to help you, matters, right? And what I just heard is, yes, consortium model is one of the models to go for, and it can be valuable and powerful when it works. But because of what you've been doing, and you started at the start of the value chain of check deposit, you actually have the patterns and the data from these years of experience built into your models, and then your models are super efficient.
Absolutely.
That's
the sales pitch of Valid. The other side of your question, there are banks that would have no need for the technology that we provide because of the market they're in, the niche that they serve, right? Their mission, their focus. They might be a neobank that is obviously all mobile and not looking to introduce paper of any form or fashion. You have small community banks that have a very small specific, or a credit union that serve a very small and specific population, and they may not be flooded with check fraud, right? It may be able to be solutioned with some very low touch manual tools. So there's a wide spectrum here, right? But knowing your audience, knowing your customer base, and the customer experience that is going to require, what is required of you to win with that customer base is going to matter. So
retain these days.
To retain and grow and acquire more, right? So I think knowing that ought to then start to structure, what are the solutions I put in place, the vendors I partner with that create the ecosystem that allows me to serve that client base the way that I want to. And that's where we would often say and continue to see layered approaches around fraud. So it's not just this. It's, image with Valid, it's consortium with this tool, right? It's like these layered approaches. And that's very difficult when you go down the chain in the FI world. So top 100, top 50, top 10, they're getting those best in breed. They're retrofitting these solutions with custom solutions. And we work with them, right? We work with them to do that. And as you go down market, you're reliant on more and more people. So at that point, it's what can actually fit? What do I even have the opportunity to bolt on? And they have to be more judicious with their decisioning process because of that. They can't layer on three different tools for one transaction type. So I think
No.
that's where, right, they have to think about their unique ecosystem.
Where is the screaming pain coming from? Is it coming from large banks, $200 billion banks, regional banks, community banks? Where's the pain coming from?
Yeah. We see two very different profiles, and I would say, right, the pain's everywhere. The problem is everywhere, but there are two unique individuals, if I think about a profile, that we see most acutely. So one is in the smaller community banks that are tied to the technology stack of their core, and these it's randomized. Not every institution is dealing with check fraud, but the ones that are dealing with it in a way that they've never dealt with it before, and they're significantly handcuffed to the solutions that are available on the shelf. And here's the problem. Here's why I call out that audience, because the number one solution is to drive a lot of manual review processes. The number one solution ends up driving just a lot of alerts, a lot of review. And the last thing these organizations can afford is to do one of two things: either stand up a large office or add a bunch of bodies to a fraud solution, right, in order to just manually review checks, or push all that friction to their customers, because they're supposed to know their customers. And so now, if I've banked with you for 15 years and all of a sudden you're treating me differently because I'm not getting access to funds, as an example, that feels like it's incongruent with your mission. You don't know me, right? So that's one very real problem that's become very prominent, I would say, in the last 3 years. And then there's a very different one, which is I would categorize them as a top 75 up to top 10 bank. And it's, we think of them as regionals. The bank size relative to what the size of these banks were 10, 15 years ago, these are enormous asset size banks, but they're considered, regionals, even smaller regionals, some of these. So they are expected to have the technology of Big Brother, right?
Yep.
The big
Expectations real.
They're trying to drive that type of innovation and process. They have a huge number of clients, right? Thousands and millions, even a couple million up to customers. But they do not have a team of 75 quants that are, PhDs building machine learning algorithms internal. Like, they do not have that sophistication, right? It's usually a fraud team with anywhere in that spectrum from, 3 to 5 specialists up to a team of a dozen or 2 dozen. And they're trying to manage very complex fraud being perpetrated against them because they have large footprints in these bifurcated ways. And those are the two at very different ends of the spectrum that are struggling with this problem the most, I would see.
Do you see a way out for either of those?
On the one side, right down the spectrum, they're tied to either extremely simple implementations, deliveries that require almost very little lift or fit within the box of the technology stack that they already have. And so, right, they're taking things off the shelf from their core provider to bolt on to, a problem and to try to solve it. And we see this, we're working with those, core providers. We see lots of innovation that they're kind of grasping at to try to bring that to that market.
Nice.
So
that's great to hear. That's music to everyone's ears.
But I think that's also really interesting about NayaOne, right? Like, you guys are working to create these solutions that allow folks to get faster access to better technologies, right? And that's
right.
So that's something that's in the market that I think is one of those on ramps to that solution. And then in the mid tier to upper market, they are able generally to pick one of three big initiatives a year. They're not going to best of breed of everything. So what's most painful, right? What is most necessary, or what's going to drive the most revenue? They're going to get one or two of those a year, and that's what's going to basically suck the bandwidth out of the technology projects for that entire year. And I think the point where we first started was check friction, I should say check fraud, we would say is a bigger discussion than that. It's about friction. So if you think about these banks that are trying to drive a customer experience that looks like Big Brother, they're trying to fight fraud, they're trying to acquire new clients and create a better customer experience. Well, like, how can you do that? Well, maybe check is actually worthwhile when half of your customer base is going to deposit checks in a year. When that's your largest fraud vertical that you're trying to solve for. And we think, there's ways to think about that reduce friction, remove fraud, create a better customer experience.
Dude, another great point, because most people will just think about check fraud. Actually, it's the whole end-to-end journey, right? In terms of experience. And I'm thinking about credit unions, right? So, when we're talking to credit unions, they're a member organization, they're non-for-profit, they're member organization. Their number one priority is to look after the member experience. Okay, so if you have 1 to 3 things to pick, and experience always top, actually, you go check fraud. Oh, no, fraud's important, but I got to look after the UX. They need a whatever they need to get but actually, fraud is a big part of the experience, because, and actually probably the most thing that, the thing that causes the most uneasiness and discontent, right? Like, because you're like, you're losing money, or you're not receiving money at time, or so that's another great point there.
Yeah, if you're in a parking lot and you don't want people to speed, you put in speed bumps, right?
Yep.
And we've done that throughout the banking system. There are just speed bump after speed bump. And so instead of creating, right, digital rails that are customer friendly, that are driving massive adoption, you hit a speed bump. And then you launch a new product, and fraud enters the door, and you enter another speed bump. And if you
or
are
more
not,
bodies to review it, to which causes the slowdown.
Exactly. That's right.
Even more slowdown than the speed bump. Yeah.
There's smarter ways than speed bumps, and that's, I think, part of the thinking.
Just a couple more questions in terms of, so we know who's feeling the pain, right? Who in the organization is typically feeling the pain, right?
That's a good question. Yeah.
Yeah. I'm sure it's number of people.
Well, this is part of the pain, actually. Right. This is part. So right. So and it's different in every organization, and the bigger the organization, the more bifurcated it is, right?
Yeah.
But that's part of the problem, because you have fraudsters. The fraud problem is the fraud team. In a larger organization, you can have fraud strategy. They might be buying solutions. They might be helping deploy models. You have operations, and that's a whole piece that we haven't touched on. And that's where you can have all the right intelligence, but not be able to operationalize or execute against the intelligence because of a process, because of a policy, because you allow manual intervention at the teller line, right? There's all sorts of reasons why good intelligence fumbles it on the goal line, because operationally they can't execute it. And so there's a huge component there. That's right. Exactly. And then on top of that, right, is who owns the customer, who owns the portfolio, who's trying to drive revenue and wallet share, customer experience. So you can have channel managers, ATM, teller, digital. You can have deposit owners that own all of deposit or fees or the P&L. And so there is a very complex Venn diagram of ownership around this very specific issue that creates a lot of the friction in decision making. And how do I go to market? Because they're usually at war with each other, right? One wants to stop the fraud, which means I want to introduce friction. The other one wants to drive the client base, which means I want to take out the speed bumps. And you have to find solutions that are able to think holistically about this. Otherwise, one party in the bank is going to win and the other one might lose.
Well,
But
and
if you're
the other 6 might lose, right?
that's right. There could be multiple losers with
So
one win.
in your experience, have you seen a model like an org model that works best in this size organization? Like, where should
We
the,
would.
like, totally get the point about get a solution that's holistic and actually cares about the customer and the bottom line of the bank and, the shareholders' interest. That's rare. Like, like the solution's there, but like getting that alignment is can be a rare thing in that size. Like, have
Yeah.
you seen a good model that,
We would
help?
like to think we play a critical role, right, in
Yeah.
creating a lot of that, which with some of our clients, that's exactly what we're helping them do. But we see a lot of different flavors of this, and others. Um, I'll think of like two examples. So Meta Community Bank, that they're not our client, but they think very intelligently about this. They're very purposeful and intentional
It's
about the
great to
way
hear.
they are creating that ecosystem. And I think that alone puts you at an advantage over
Mm.
much of the industry because they're intentional about it from top to bottom, start to finish, and thinking about it from the entire perspective of the fraud, the friction to the customer experience, and so forth. So in certain institutions, right, they have the capacity to handle, if thought through strategically and holistically, we're going to have a gap here, but that's where policy is going to be affected, or we're going to introduce this process and understand it's for this gap. And in these other ways, we think we can provide availability or we can manage the risk, right? So they've thought
Mm-hmm.
about it pretty well. There's a regional bank, a large regional bank that is a client of ours. They handle the back end really, really well. They build modeling and can find
Mm-hmm.
fraudsters. They've excelled at this internally. They punch way beyond their weight class from a sophistication
Nice.
perspective. But they leverage us to be the tip of the spear to accelerate funds and guarantee them for
Mm-hmm.
check deposits. Because that's the piece, right, that they couldn't do. And they offload risk then to us. So they made a strategic bet. We handle one piece of the pie. They've brought their internal resources to pick it up from that point downstream. And they have a really, among the best in class experience because of it. So they took, us and another vendor, they put us in a strategic location, they focus their resources, downstream from that value chain, and they provide a good customer experience beyond their competitors. They drive fee revenue with the solution. They're growing household growth year over year outside their
Nice.
competitor banks, and they're
Yeah.
managing the backside risk in a way that their competitors haven't. So there's ways to do this, with valid or without, that are strategic in how you think about each part of that value chain.
No, totally. I totally get that because it's similar in our business, right? Which is, and I'll draw the connection in a minute, which is we go talk to the banks. Banks are like, hey, we're struggling to adopt technology. You know, we're looking for a sandbox to help us. We typed in digital sandbox. You came through. You have a conversation. You go meet a few folks in the bank, and they were like, oh yeah, but we can build it. I'm like, of course you can, but what you don't have is the best practices that we've got and all our customers are using based on being part of the NayaOne ecosystem. So if I draw the same parallel to you, is you could play the back end role, the models, the fronts, the spear tip, and be a trusted advisor in how to go about managing fraud friction. I wouldn't say fraud, sorry, check friction rather than check fraud, because friction
That's right.
is because experience and fraud, right? So,
That's right.
um, Rodney, this was really good, super
Oh,
educational.
appreciate it.
Um, the three things I'm taking away from this, right, is that check fraud, i.e., check friction, isn't isn't like, it's not gone, right? Like, yeah, sure, if you're a 17-year-old with all the mobile apps, but there's a lot of population that is still using check for liquidity reasons, for habitual reasons, and it's just a thing that is still a thing in some of the communities and some of the age groups, and it's not going anywhere, which means there are also quite vulnerable parts of the community that need to be protected against check fraud and then overall check experience, right? So that's one thing that I'm taking away. Well, actually, there's two things. One, the check fraud isn't going anywhere. Well, checks aren't going away anytime soon. Check fraud is up and isn't going anywhere. And part of that is it's actually not just fraud; it's the overall experience, which is banks are struggling to keep customers, grow their wallet share with them, and grow their business. So that's like one big main point. But there's three sub things that I've learned in there. The other thing that I took away and I loved in our discussion here is the holistic view, right? That was certainly a gap in my understanding of check fraud. Is like, you can, okay, check fraud, well, that's where it comes from. Okay, those are the things we look for. No, but actually it needs to be part of the overall ecosystem. What do you need? Which part of the value chain are you going to use which tool and serve? So I think that's really, really interesting and really valuable. Hopefully the people listening to that also find that useful, because I did not appreciate that. I understand that banks buy 10 fraud systems and cobble them together and fingers crossed and they will work, but there is a method to the madness here, which is important. And then the third piece that I found super interesting and valuable is that you've got many, many years of data which has helped you derive the patterns at multiple levels, which then feeds into is part of and feeds into the secret sauce, which I think is really important. So it's like kind of like inbuilt consortium without having to be a consortium. Would that be the right way to look at it?
Yeah, 100%.
Okay. Well, Rodney, this was awesome. Thank you for your time. I can't wait to release it and share it with our audience to get some education happening on the check fraud.
Yeah. Appreciate you taking the time, walking through it. It was great.